Hey everybody, so directional wick fill entry, right? So this is going to again be dependent on overall where we are on a higher time frame. Also as well, you can use this on using a 15-minute POI. It's just going to be a different model that you can use instead of looking for a lower time frame break structure. If you're out and about and you haven't got time to go down to 1 minute, or if you just don't see a break, this is still going to be valid. So the first thing that we want to see, so we'll just do it again on a short position. I can flip it around for a long. Price, let's say we're coming up. We're at the top of Asia on this. Also, ideally, you're going to want to be in a higher time frame POI as well on the daily, weekly, or 4 hour, maybe 50 EMA as well. Adding your confluences to that in terms of how aggressive you want to be with this type of subjective entry. Now, the old model would have been, and it's still valid, price comes into an area. Let's say that this is the ultimate high, or the weekly high, or the daily high, and price is coming in, and you'd be looking for price to come up for your lower time frame break, pull back to come down for Asia, and then carry down to the low. That's still absolutely fine. But sometimes, let's say that you've got your weekly high, which is, let's just say we're at that same point right here, and then we're looking for price action now. So remove that for now. Weekly high, you can have your ABs below, but I just want to keep this as clean as possible. Price start to come to the area above and then starts to slow down. So you will see quite a lot, and this has been happening lately, that maybe we might have a wick up to this high like this, with like we've got a candlestick on. Then you may have, again, another wick up like this. You can have, again, it doesn't matter what it is. Let's just say that this one's a doji with something on the top of it as well at that high, and then we're just going slowly and just keep going and going. Now the important thing for this, sorry, we need to make sure that is perfect on here, right? We need to make sure that there's lots of wicks to the low. Generally, if you're starting to get something like this, but price is slowing down, and again, if we have a doji, something like that, then what we're looking for is an indication that, let's say this is a weekly again or a daily high, we want bearish confirmation. So the first thing that we're thinking is, and this is the first thing you've got to think every day, is I want price to come and fill Asia range, right? That's what we want to see. We want price to come down to fill Asia range, and then it can do whatever it wants to do from there. But if you then get a candle which fills those wicks, again, if it's a Mariposa open candle, even better. But let's just say for the sake of this, we've just got a wick above just to clean everything up. Again, like a evening star formation, what this is showing is that sellers are now in control. So all of these wicks here indicate that sellers have tried to push price action down, and buyers have been successful in pushing this back up. Even with the doji, let's just say these are bullish closures, which is even better for the bearish move entry, is again, price has tried to pull it back down, and we've got buyers that have been able to successfully close those candles as a bullish candle. So that's a blue candle. And then all of a sudden, so at that point, there is no entry, right? You might be thinking, well, I'm at that weekly high, I'm looking for price to reject. Let's just say on the higher time frame as well, you've got your 50 EMA, which is coming down like this on the daily or 4 hour. So you know that price should generally be coming to reject that area, and especially come down to fill Asia to the low. So in this type of entry, once we've got that bearish confirmation and we're back below that weekly area or daily high, I'm quite happy to then look for price to pull back up, to come down to start fill Asia, and then carry on. And again, with all these trades, I'm still only looking for 3%. So normally, let's just say if we were looking for, your standard, let's say 15-minute break, you'd probably have to look for, let's say this is 15-minute price action, you'd probably have to wait for a break of this low, then a pull back up to the high. You haven't got an OB, so you wouldn't be able to get in. So it prevents you from entering the position, even though it looks decent on a higher time frame, and we've got bearish confirmation. So again, all we're doing is the same thing at this point. We're then waiting for price to pop back up to this, and again, you want it back up in this area at that high, to then get that retracement, and then you're going to enter at this point with your stops above that high. And I'm going to again show you another example of this shortly on a trade that I took last week before you move down to the low. The one other thing to just say is that sometimes, so you want it ideally to happen again in the next candle, the next 1 or 2 candles max. After that, leave it alone. So if we have price pull back up, let's just say, so yeah, first 1 or 2 candles and you can get back in. If not, then it's likely then just going to go without you and then just forget it. And you want to catch that move as quickly as possible, because then let's say if we come down in Falasia, don't then when it pops back up go back in, because you've missed the move. Target's been hit, there's no point. So you've got, as soon as you see, you've got to be reactive, in straight away. Sometimes you will see that price action maybe on the next candle is only able to go up so far, right? And then let's just say we have that's going to result in a bearish closure, which is going to look like this, right? At that point, you're going to change your entry. So again, we're trying to get within the first 2 candles after this bearish move. So all you're then going to do at that point is then move your entry point down to this high here, because what that is indicating that price isn't strong enough to come back up to that high. And actually, if you can get that type of move, again, it's going to indicate that we're likely to continue down to the lows a lot quicker because we have bearish momentum. You're going to change your entry point to this high here. Again, cover this where you can. Let's say if your stop can only go here with 10 pips, just leave it alone. But ideally, you want it to be at these wick highs to give yourself as much protection as possible, just in case price does quickly wick back up before dropping down. And then you're then going to try and get in at that point. If you've then got, again, another, let's say the next bearish candle, and generally does happen this, I think I'm showing one of these already, generally is then going to pop back up, and then look for our move down to the low. All right. Also as well, don't be scared if price, because when you enter, your bullish move is going to look like this. Don't be worried about it, because the whole idea is that we've had that snap, and therefore we're now coming back up to retest those highs. But you need to try and get in at the highest possible point at that area. All right. So that is option 1. You can imagine what the next option is. Price is popping up, high, 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 low. Again, same thing. We're coming to this high, and then all we're doing is again looking for. It doesn't have to be as dramatic with this one. So let's just say, let's just draw a couple of these candles on, and then we'll again. You've got your wick coming down. Doesn't have to be a Marubozu. Can be a doji, something which is indicating an overall slowdown in price. Right. Again, we've got maybe another little doji. We're just looking for price to show us that we are losing that bullish momentum. And before this, you may have had a candle which is looking like that, which is carry on moving higher. Okay, so let's move this out of the way a sec. That's going up. So it's bullish above this area. Let's just say with something at this low. Again, can be a Marubozu. If it's a Marubozu closure, and then you've got bearish moves and a slowdown in price afterwards, then it's even better, because then again, you know that this is a fake out. So all we're looking for again at this point is then confirmation of price coming down. The different thing on this is, of course, we have now got imbalance. So all we're looking for is price to pull back up to the imbalance area for our entry. Again, if you've got a Marubozu open, it's even better. But if not, if you've got a wick, then that's fine. And then you're just going to wait for price to pull back up to this area here before you move down. Now, again, the confluence on this, bullish move up, slow down in price, and followed by a bearish engulfing down. But your entry is completely different, yeah? Because on this one, we're looking up at here. On this one, we're looking to get in at this point and then try and cover that high to then come down in Falasia. And that is the directional wick fill, because what you are doing on this one, you are filling the wick to then show that sellers are in control. This one as well, you've then got the directional change, which is your type of evening star formation. Now, even if you just had that, and we're coming back down below the weekly high and the daily high, back below the area, I'm still quite happy to go in. Now, you may see sometimes let's just say that this is a session high that starts here, you may have that. Now on the old content, it would be, right, we're not going in because we've closed above, but the reason for introducing this now is because the way that price action is moving has changed. Markets are a lot more volatile. I think that, you know, maybe institutions and so on are getting a little bit more savvy in terms of ways that people are trading. So we have to stay one step ahead of them at all times. And again, I suppose you could call this, you know, a stop hunt, liquidity grab, whatever you want to do, because at sometimes, you know, you are going to have money which is sat above these areas. All right, but you're getting in earlier because then again, if we were looking at the old model, we would be then looking for price to then break a 50-minute area to then pull back into what we're doing now is straight back up into that point. And just to say, this does not have to happen within the next two candles. You can be quite subjective with this. So let's say, I don't know, price pops up a little bit into this area here. We don't fill it, and then we're starting to then move down. Don't move your entry on this. This is different to this. You can move your entry if price doesn't pull back up to this area on this one. However, if you miss it, then don't go, I'm just going to put it down there. Please avoid doing that. And then maybe what we can do is then just wait. You might again have price which is going to continue to move away. But eventually we should be coming back up into that area. And then that's when we're going to get price to tag us in and then get the rollover to the downside. So directional wick full entry, and I'll see you on the next video.